I'm Sarah Sharp. I'm a deal attorney who helps people buy and sell businesses every day. And I'm going to tell you the most common misunderstanding about the law that my clients have. A non-compete. I can't tell you how many times a day I hear non-competes are not enforceable, so let's just sign it. It doesn't really matter. And that's a critical misunderstanding. All 50 states have some kind of rule about non-competes, and a lot of them will say you can't have a non-compete in a lot of circumstances. And there's some that are incredibly restrictive, like in California. So people have understandably come to the conclusion that non-competes are not enforceable and they don't matter. Additionally, 2024 all the way up to September 2025, when it was killed, the Federal Trade Commission was coming out with all kinds of regulations that were pretty complicated, but the headline associated with the regulations was proposed non-compete ban going into force, nationwide non-compete ban imminent. So a lot of folks like myself read the headline and not the full article and understood it to mean that there was going to be no more non-compete in the future. Well, A, that didn't go through. It was the kibosh was put on it in September of 2025. B, that was not the rule for everything. There were exceptions even to that large rule. And in every state that I know of, so comment if you know of one that's not this way, and certainly in the FTC proposed ban language, there was an exception where non-competes were absolutely enforceable in the context of the sale of a business. And thank goodness there was, because if there had been a rule that rolled out that said non-competes are not enforceable even in the context of the sale of a business, my entire profession would have bottomed out, because you would not be able to sell a personal services business anymore. It would have no value to anyone if you can't keep the seller from going out and competing with the client list the very next day. So it's important that they're enforceable. They are enforceable in the context of a sale of a business. And I think that you need an attorney who really understands that, and you need to understand it yourself, because there's a lot of different ways that that plays out. For instance, you have a lot of documents when you're drafting the transaction documents for the sale of a business. And therefore, there's a lot of places you can put your non-compete, right? You could put the non-compete in the consulting agreement that the seller is going to use, because that's where you talk about the seller helping the buyer after closing. And really, that's, a good spot for the non-compete. But you may not want to only put the non-compete there, right? Because in a lot of states and in that proposed ban, a consulting agreement would not be a place that you could put an enforceable non-compete. However, the purchase agreement, where you explicitly talk about how the non-compete is being entered into in exchange for the sale of a business, might be a great place to put a non-compete. And that is the logic underpinning a lot of the documents I see from the other side. The big roller uppers in my space in accounting often will say, we're not going to give you an employment agreement. We're going to give you an owner agreement. And in exchange for a tiny amount of ownership interest, you're going to enter into this. And that's where the non-compete is going to live, because they are trying to make sure that has the nexus of enforceability. And it's smart. They should. Another thing that I think is really important, I so often see non-competes that say 5 years from closing, you will not compete with the business. So there's a lot of pieces of the puzzle with a non-compete. In order for it to be enforceable, you do need, even in the context of the sale of a business, you still do need a geographic scope. You still need a subject matter scope. It still needs to be narrowly tailored to protect the interests in question, right? So they can't just be this restraint on all trade, because we live in a society, for better or worse, where we really respect people's right to work and earn a living. And we don't really support laws that would keep people from being able to earn a living. So, if there's a non-compete that's so broad that a seller can't drive for Uber or deliver groceries for DoorDash or go, be an instructor in watercolor or whatever after closing, that's going to be probably viewed as prohibitively too broad. So geographic scope, subject matter scope still need to be there. A mistake I regularly see from really good attorneys is they'll say the seller won't provide services that compete or won't engage in activities that compete with the business for 5 years from the date of the closing of the transaction. So a lot of my deals are financed through the SBA 7A loan program, and that is a term loan of 10 years. So there is a very real proposition. If you have a purchase agreement that says the seller will not compete with the business 5 years from closing, you have created a potential eventuality where the seller can lawfully compete with you at your 5 year and 1 day, and you're still paying 5 years of your SBA 7A loan. That's okay. There's nothing we can do because you can't have an enforceable 10-year non-compete, I don't think. And once again, comment if you disagree. But for the most part, it shouldn't be really like you should be running your business in a way where the seller can't come and steal your clients 5 years after everybody's heard from them, right? They're distant memory at that point, and you're doing a great job. The clients wouldn't go with the person they used 5 years ago. However, there are circumstances where the seller will continue to work with the buyer for a period of time. Under the SBA 7A loan program, the seller is not supposed to work with the buyer for more than 12 months after closing. But sometimes, they can stop working and come back, or they can pinch hit every tax season after the fact, and it just kind of works out that way. If that happens, if you have one seller, let's say Jane has been interfacing with her clients for 30 years, she sells her business, but they still really like Jane and she's there every tax season. Well, you don't want her to be able to work for 5 years and then go out and competitively take all of those clients away lawfully while you're sitting there paying probably Jane on a seller note and the bank loan for another 5 years. So I recommend drafting. I always try to draft mine to say 5 years from closing and 2 years after the last day the seller is working for the buyer, so that even if the seller continues working for 10 years after closing or pitches in every tax season and has that pet client that they're still helping with, then, the last time they do that, there's a kind of new parallel non-compete that will kick in for 2 years thereafter. So I try to put that in the purchase agreement because that's where it would be the most likely to be enforced, even though it's triggered upon the separation of services. So it could equally, in a different environment, maybe fit better in an employment or a consulting agreement. Those are some of the restrictions of the non-compete that really matter. Ultimately, if you're getting a financed loan and the bank has an opinion on the minimum non-compete requirements they will finance, the bank's opinion kind of matters the most. But I do often see, 100 miles, 5 years. Do yourself a favor and critically look at it, because another thing is 50, 25 miles from what? If you say 50 miles from Portland, then you've got this crazy city blob and you have to go 50 miles out of the most proximal part of that blob, and that can get very difficult to figure. So you want to pick an actual point. The business premises is a good one, or your home address, or a particular address, just so that you can have one point that you can measure out 50 miles from. Because ultimately, I always say that when I'm representing somebody who's under a non-compete, it needs to be clear enough that I, as their lawyer, that can read it and say, you're planning on doing X, this does or does not compete with the non-compete. And a lot of times they're not written clear enough for me to be able to give that advice. And that's my standard of care. It has to be at least clear enough that a lawyer can advise a client on how to comply with it. And I think that that's reasonable. So an actual point in time, point in place in a location where you can draw out how many different what's the scope of 50 miles. There is also some ambiguity just inherent in that, as far as, is it as the crow flies? Or I know this is very niche. Is it 50 miles as the crow flies or 50 miles on a road? And I actually had that come in Colorado in the context of a non-compete, where Glenwood Springs was within a certain geographic scope of Aspen when the pass was open, but when it was closed in the winter, it was outside the geographic scope. So there's really, if there's anything on the edge, there's no amount of clarity that can be too much. So let's say you get a really good 5 year, 2 year from the last day that provides services type of non-compete in place that covers exactly the right type of services, but the seller is uncomfortable with it. Very reasonable. If you were giving me a non-compete, I would also feel uncomfortable with it. It's hard to know. Life is long. 5 years is a long time. What can you do? What can you not do? If you've been practicing in a certain profession for a long time and then suddenly you can't anymore, it can feel really disconcerting. What if you don't have enough money for retirement like you thought you did? What if, you wind up needing more because somebody gets sick, you can't go earn a living? So there's a lot of things that you can do to bring the seller comfort, because most of the time, especially at the time of the transaction, the seller would not want to do anything that really would hurt your business. So allow carve-outs. A lot of the carve-outs I see are, you can, we'll have this non-compete that exists, but notwithstanding the foregoing. It's kind of the magic, weird, arcane language. that lawyers use to say seller might continue to provide services to close family and friends for no cost. Because, in my world where people are doing taxes, they want to keep doing their kids' taxes, and that shouldn't be considered a violation of the non-compete of sale of their business. They've been doing their kids' taxes forever, and they would never charge them. So that's one. Sometimes it's a pet client, which I don't mean in a derogatory way. I just mean a favorite client. Sometimes it's a pet client that says, I'm not going to go with anyone but you, Brenda. You've been my woman from day one, and you're going to be the one doing my taxes until one or both of us is dead. That's a direct quote from a real client. And when that happens, you carve them out of the deal. You say, okay, well, their excluded asset is this client. And, the non-compete will be written just like it normally would, but notwithstanding the foregoing, the seller can continue providing services to this one client that demands it. And very doable. Other things you might consider allowing them to provide services for their church, for nonprofits that matter to them. And sometimes people who are especially interested in more on the younger side will say, notwithstanding the foregoing, the seller may continue to provide services as a full-time W-2 employee for a single employer who is not an accounting firm, or some iteration of that's trying to capture the potential for them to go be a CFO for a company in a way that's not competitive at all with you as the person owning and running an accounting practice. And all of those are okay. So it's always a discussion. It's great if you iron it out. It's great if you add exceptions. And that just means that the parties actually understand what they're agreeing to, which is the first step in actually complying with the rules that you have adopted. And it's a really good sign of a healthy transaction. So that's the number one misunderstanding that my clients have is non-competes don't matter. They matter a lot. There's an almost infinite level of nuance to them. So dig in, be very literal, be very careful with every word and every sentence in your non-competes. And that doesn't even touch on all the other restrictive covenants that matter, like your non-solicit, your non-disclose, your non-disparage, which should also be in your agreement. Hope this is helpful. If you find it valuable, please like and subscribe. Also, if you find this helpful and interesting, you're a big nerd, check out dealacademy.org for more stuff about this, and good luck with the transaction.